Welcome to the Future is Gold podcast series, hosted by Alexandra. We believe in empowering you to take control of your future so you can live the life that you want. And we do that by allowing you to buy, send, spend, earn and secure the world's oldest currency, gold, while being supported by modern technology. At Nuggets, our mission is clear. We're making gold accessible for everyone by giving you the knowledge and expertise needed to make informed and smart financial decisions that benefit you.
Hi, and welcome back to our Nuggets podcast. I'm your host, Alexandra, and on this episode, we will discuss why gold is a necessary option for you, focusing on its features and benefits and what exactly you can use it for in today's world. There is definitely a misconception out there that gold is inflexible or only catered towards high net worth individuals. We're here to tell you how everyone can benefit from getting into gold. I'm joined today by gold guru Jeff Rhodes, our principal consultant at Nuggets and founder and managing consultant at Rhodes Precious Metals in Dubai. Jeff, you've had a long and successful career in the precious metals industry, spanning across 4 decades and working across 4 continents for major bullion banks and financial institutions. Jeff, I have to ask you, where do you see gold as an investment in the next 5 years?
Well, I've been in the gold industry for 42 years. 4 decades, and I've always thought that gold is so much more than an investment. It's much more. For example, the way I'd like to see it, you invest in gold because it's the best performing asset. Using any time span, certainly for 5,000 years is a bit too long for us, and maybe 2,000 years when the first gold coin was made. But most recently, gold was deregulated in 1971. And since then, Alexandra, let me turn this on its head a bit. How much do you think gold is up in percentage terms since it was deregulated back in 1971? Have a guess.
If I was to have a guess, I'd say 200%.
5,500% at this moment in time.
Wow.
So why gold? It's simply the best performing asset class. But as I say, so much more. I see it as an insurance policy. Honestly, although it is an investment, it's also an insurance policy. We all insure our houses, our cars, our health, our life. Gold helps you to insure your wealth. And not just for rich people, but for anyone, because holding gold, it will always keep its value and more.
That's really interesting, Jeff. And I know at the moment we're existing in a current inflationary environment. It's led to people losing faith in fiat currencies since the continued increase in prices means the purchasing power of the dollar is reducing. Jeff, how do you think the current inflationary environment impacts people and their finances?
Well, firstly, it's really topical. If we were having this conversation pre-COVID, I don't think we would have been talking about inflation at all because it was the I word had gone away. And in fact, central banks and governments around the world were worried about the lack of inflation. But because of the amount of money, fiat money, printed money that's been thrown at the global economy because of COVID-19 pandemic, and now it really is an issue. Last week, the latest producer price index from the US showed an annual increase of 9.6%. Now, this is a record level. This is record numbers. And so inflation is now a problem. It's almost, Jerome Powell and the Fed has unleashed inflation thinking it's a good thing. Now they're struggling to deal with it. And when I read about CPI, latest as even 9.6%, but month on month, it was up around 4.5%. But we all know that inflation, the real inflation today, with your mortgages, with your, the price of petrol, with everything, is much more. The only real way to keep pace and keep ahead of inflation is to have some gold. not 100%, maybe 10% should be in gold.
Yeah.
And it will help to ensure your wealth and help ensure your purchasing power. I've got some numbers here that I just want to throw at you, as I say. Let's not talk about 1971. I was alive, you weren't. But 2001, you certainly were.
Yeah.
And everyone remembers, the turn of the century. Well, since 2001, gold is up 581% since in just 20 years. The average increase in the price of gold is 108% over that 20-year period. Now, let's look at the US inflation. So CPI over that same period between 2020 and 2001, CPI was up 48%.
Wow.
Gold up 548%. So, and that's a measure, that's measuring, these are numbers. It's not my rhetoric or, saying to everyone, look, yes, it's an inflation head. The numbers tell you 548 against 48. So
So
the purchasing power has gone up 500%.
that's amazing. And,
It's
particularly living
amazing.
in the times that we're living in, they are unprecedented times, as you mentioned.
They are.
So,
Absolutely.
Jeff, if you could explain to our listeners, how exactly does gold deal with higher inflation?
Naturally, it's just the one thing about gold, it's an asset class that is nobody's liability. If in all currencies, dollars, your liability is the Fed and central bank, Australia and the UK and so on. But it's an asset that is no one's liability. It really belongs to the people, and it deals with it naturally. I mean, just look at the price. Once the world starts to look much better, once equity markets are going up and things are under control, oil prices are lower, you'll see gold come away. But it will always keep ahead of the game, and it's not an opinion; it's facts. The numbers are there.
Well, I think, Jeff, the average person, they may view gold as just a material to create jewelry. I think, they're not necessarily thinking about it as an investment. I think it's becoming a different ballgame now because it is becoming more accessible. With key players in fintech like us at Nuggets, for instance, we're now utilizing modern technology to create platforms that allow people to use gold more easily, not only just as an investment, but also as a spending option. So can you explain to us a little bit, like, what are the spending and investment options of an individual when it comes to gold?
Well, look, firstly, I had a conversation with my son about a week ago, and he was saying, Dad, you've been in this market so long, what do you see, what's changed about it in those 42 years? Until now, until, companies like Nuggets, the answer is nothing. Nothing had changed. It was the same methodology, the same old, all that time. But now things are changing. And I tell you what's happening with companies like Nuggets. It's democratizing gold.
Yeah.
Gold has been in the hands of, you said, high net worth individuals, bullion banks. And there are only a handful of bullion banks in the world. In fact, I don't want to mention their names, but let's just say, on one hand, there's a number of influential bullion banks. And so it's really been concentrated and a product and investment aimed at rich people, people with a lot of money. But now Nuggets and others are making it possible to own gold. Now, why own gold? I've already talked about the ability for maintaining its purchasing power, but how could you buy it? I mean, it was difficult. Even before the advent of ETFs in the early 2000s, even for big investors, it was difficult to access gold. You had to buy shares in mining companies, Australian mining companies, to access value from gold. Then you had exchange traded funds, which are equities. It's like a trust. You're buying an equity that's backed by physical gold, but it's not physical gold.
Right.
It's really not. So what we have now is the ability of fractional ownership. So thousands of people, 1,000 people, could own a kilobar. So
Yep,
you got a milligram, and
exactly.
you have gold. Now, but why would you do that? The main reason is you're going to secure a store of value that is proven not over a few years, over 5,000 years. It's a proven store of value. And what companies like Nuggets are doing, you're making it possible to use it. So
Ex-
you, literally, if you have a credit card or a debit card and it's backed by gold, you can spend it. I went to a soccer match yesterday at my favourite team, Tottenham Hotspurs, who drew with Liverpool. But everything I paid was with I've actually got a gold card, not a real gold card, but one from one of the banks, a gold card. Now imagine that's gold. If I've got gold sitting in my account, I'm using it. I'm using it to pay for my tickets, to pay for a beer, just to pay for stuff. And typically you're going to get an increase in the value if you've got some Aussie dollars or dirhams. You're in Dubai. I'm in Dubai, but if you're in Australia or US and you've got dollars sitting on your account, then those dollars will only be those dollars. If you've got 1,000 Aussie dollars, you've got 1,000 Aussie dollars. That won't change. That really won't change. But if you've got $1,000 worth of gold, quite easily over the next 5 years, that can turn into maybe $2,000. Now, I'm not predicting the price and suggesting anything as dramatic as that could happen, but it could happen. It could
yeah.
happen. You have the chance of actually getting more money from your gold than you have today. So you could be spending it, but the actual value, although the gold balance might go down, the value could actually go up. So it gives you that additional benefit of the chance of your money going up. Now it could go down. Everyone listening to this, gold isn't a one-way bet. And if you look for over 3 months, 6 months, 1 year, even a couple of years, it could go down. But the facts are, over longer periods, gold will go up. Now, before you might ask me this question, but I'll preempt it anyway. So, when should you buy gold, right? And how much? Well, I've already said, I think if you look at your disposable income and your tangible net worth, how much you're worth if you collapse everything into one, maybe 10%, between 5 and 10%. Okay, 10% when you think the world's like not looking so good, five 5% when everything's cool, everything's fine. There is no real risk on the horizon. So between 5 and 10%. So that's how much. But when? Classic when? All the time.
Yeah.
Like every month, every week, every time it's a birthday. Buy your wife some jewelry. Buy some gold jewelry. Don't buy a handbag. Now, but a handbag might go up in value as well. But always buy, and if you like, then the price you're paying will average over time, and then you forget about it. And trust me, and trust in gold, and that will really. This is not gambling, and if I said 100% in gold, forget it. It's not. It's 10%, and you will find. And for those people listening and watching, don't be scared of gold. There's a fear of gold. There are two emotions connected to gold. Firstly, there's a fear of gold because it's so complicated. Well, honestly, Alexandra, it's the opposite. It's so simple. It couldn't be more simple. It's the most simple form of money. And honestly, anywhere in the world, anywhere, you can use gold, not just with a card, but physically to buy yourself goods and services.
Well, it definitely is the
Can I?
oldest currency. As you mentioned, it's been around for thousands of years and still, completely popular throughout that whole time. But I want to
Can
ask
I?
you, yeah, go
Yes.
ahead.
Sorry.
Of course, yeah.
Just it's topical because you're Australian,
Yes.
and a few years ago, the CEO of the Perth Mint gave a presentation that I'll never forget. And he at the start of, and this was, I think it was in, might have been in Perth, but anyway, it was in Australia, Brisbane it was. And so he got out this big note, big piece of paper, and it was the old white Russian ruble note.
Wow.
Okay. And then he got a kilo of gold, a bar of gold, and he had them. He said, now, back when the Russian Revolution was brewing, the rich people in Russia bought themselves liberty passages to the US. And this, I may be embellishing a bit, but half of them had suitcases full of the white rubles, and half of them had suitcases full of gold. By the time they got to America, the revolution had happened, and the first thing the new communist government did was to cancel the old currency. So
Wow.
those suitcases were worthless.
Yeah.
But the gold was always gold is gold. And so, as I say, that's a bit of an off the wall story. And I think Richard Hayes was his name. I think he was telling the truth. But it just, for me, that sums up the value of gold. So
Yes.
carry on.
Absolutely. Well, you mentioned before about using gold-backed debit cards, and that's something that we are introducing at Nuggets. What do you think would be the advantage of using and spending in gold instead of cash or our regular debit cards?
Simply, you have the chance of the value of your balance in currency terms, in dollars or dirhams or Aussie dollars, it can go up. So you might actually spend, but the value of your gold holding means that over time the price, because gold prices are likely to gain over a significant period of time. So if you have money, if I've got $1,000, I can spend $1,000. Done. Or if I spend $500, I've got $500 left. But if I've got gold that I'm spending, I can spend it, and let's say I spend half. But if the gold price goes up, what doubles, I've got all that whatever I bought for free.
Yeah, it's
I'm
amazing.
trying to. It is because you're giving yourself the chance to give yourself a bonus. So guess what? You've bought everything you wanted, but you have a bonus. You still have gold left. Whereas if you had just had money, it's gone. That's for me. It's as simple as that.
It's super interesting. And Jeff, I want to ask you, how can a person use gold to pay for daily expenses? Is it literally just as simple as tapping your debit card and paying?
Yeah.
Or yeah.
Yeah, absolutely. Because at the end of the day, the merchant is going to get money into his account. He's not worried. A merchant, let's say, now you are a very rich person. I'm sure you are.
Yeah, of course.
Alexandra, but now you've got a debit card as part of your services from your private bank. Now the merchant who's offering the services to you, he doesn't know what's behind it. All he knows, he gets that money in his account from the debit card. So it's really as simple as having a normal debit card. Coming back, the benefit is you might actually get a bonus from the value of your holdings going up.
And I think what it's doing is it's making gold finally more liquid, which, has always been like a bit of a misconception about gold, that it's not very liquid. So I want to ask you, Jeff, what is liquidity and why is it important with gold when we talk about gold?
Yeah, liquidity is actually having, in the most simple basic terms, is having cash to spend. If you have the liquidity, you can go and buy a car, or you can go and buy a house, or you can just, go and buy a few beers. You need liquidity, and also liquidity means that the person who is buying and the person who's selling, they're very happy with the methodology that's being used. So liquidity. So I could really now want to go and convincing myself to buy some gold.
Yeah.
Okay, but I have to have some money in the bank
Mm-hmm.
to be able to buy that gold. So liquidity is having readily available, if you like, money. assets that is. We always talk about when you're analyzing balance sheets. I don't want to get complicated now, but tangible net worth. What is your cash at hand? What is your liquidity? You know, and a phrase certainly in the gold suits can be cash is king, because if you've got cash, when people are struggling and they need to liquidate assets because they need money, if someone's got liquidity, they can buy those assets. So having liquidity is crucial. Now, having an asset, let's talk about another precious metal, which is palladium. Okay. Now, palladium is a classic case. When you see the movements like over the last 2 or 3 weeks, the price has gone up, down 25%, up 15%. This is like in a day.
Wow.
Now, that is completely illiquid, where gold can't do that. Maybe a big move in gold is 3% because there's so much liquidity, so many people involved in the gold market. When you look, let me compare it to currency. So if you say, I want to deal in Indonesian rupiah versus the dollar, there are not many people in Indonesia, yes, but internationally, not many people will be involved in that currency pair. When you look at the dollar euro, it's a very deep, very liquid market. There's as much liquidity as you want. The point about gold is, since you know how much gold there is in the world physically above ground stocks, I think it's about $30 trillion worth.
Wow.
There's as much gold as you want. There's as much liquidity. Gold is one of the most liquid asset classes in the world. And as I said earlier, no government can suddenly wake up one sunny day and say, you know what, we're struggling a bit with our budget deficit. Let's just devalue. We'll devalue our currency. Okay, we've got this. And so overnight, you can lose value. And in more recent times, in Greece, for example, you know, people lost their money in the bank. Their deposits went,
Yep.
just disappeared. They were taken. This can't happen with gold, and it can't happen with physical gold. It can happen with what's so-called paper gold. Now, paper gold is just like a dollar account or a dirham account or an Aussie dollar account. You have money with the bank. You are an unsecured creditor to that bank. And if the bank goes bust, you've lost your money. Now, with gold, you can have the same kind of accounts, unallocated, but it's not physical. If the bank goes bust, you've lost your gold. If you have physical gold, which is segregated from balance sheets, you can never lose that.
It's really interesting, Jeff. And you said before gold helps against inflation. And we know that it's obviously a really secure asset, as you're mentioning. But why is it called the safe haven asset?
Well, it's the go-to asset class. So India, the second largest population in the world, was made up of thousands of kingdoms. Okay, so it sounds a bit off the wall, but stay with me. Okay,
Yeah.
so thousands of kingdoms, and obviously India is very, very agricultural, very rural. Made up of millions and zillions of farmers. Now, what they would do, they would typically keep their wealth in gold because they believed in gold. It was 2,000 years ago. It was the money. So what they would do, they would dig in on their fields. They would dig holes and put gold, their physical gold, in the ground, bury that gold, and there would be a war between two kingdoms. And when it all died down, they'd go back to their field and dig up their gold. It was their safe haven. It was their safety. It's where they kept their money. And so, more recently, I've already talked about Russia. Russia was a classic example. If you have to get up and go, now, how can you take your assets? Well, if you have a small Samsonite briefcase today, you have $1 million worth of gold in there. So it's not just Indians, but Russians and Europeans. Obviously, Europeans, people forget over the last 100 years, we had 2 world wars, and people were displaced from their homes, and they had to get up and go. It was their safe haven. It's the asset that you go to. It's the money that you go to when there are times of trouble.
Yeah, I agree with you definitely. And you mentioned India. Culturally, they hold a fundamental belief in gold. We see it there used regularly for gifts or for celebrations. It's passed down generationally. They even use it as dowries. Why do you think gold isn't as popular in the West or in Europe?
Should we kind of classify the West as America?
Yeah.
And it's a really important point because everyone clubs together the West. It's Germany, it's France, it's UK, it's US. US is different to in fact, same as UK. I don't think we were invaded by the Romans. So, but really, the US has never been invaded. Okay, the Americans have never had this affinity for gold as that safe haven. Obviously, India and China, it's part of their inbred part of their culture. But in Europe, I kind of disagree. If in Poland, in the Czech Republic, in the sort of East European nations, it's really big gold markets. I found out recently, I've been in the market 42 years. I found out recently that Poland is one of the biggest gold coin markets in the world. Poland.
Wow.
Germany also, very, very big gold coin market. Now, when you buy bullion coins, it can be for numismatics because of the beauty and heritage, but buying bullion coins is really not as popular as India, but in, as I say, Germany, France, Italy, and certainly Eastern European countries, very popular. So it's a bit of a misconception.
And what do you think, Jeff, about Australia or the UK? Like, why isn't gold as popular, perhaps in these kind of cultures?
Well, it goes back to we've never had to get up and go.
Yeah.
With our wealth in our suitcase, we haven't. And Australia never will. The UK never will. And so there's no. We don't have anything in our psyche that says, you know what, we better have our pot of gold so that we have to go somewhere. I can pay for. I can look after my family. In Austria, the Austrian representative to the ECB gave a presentation or made a speech quite recently in the last year or so. And he said that why Austria believes so much in gold is that, during the Second World War, his mum had a stock of gold coins and paid for the family to get through the war, paid for food for the family over that period of time. So, but Australia, we haven't had that. UK, we haven't had it. God willing, that we never will. But nevertheless, I think the fact that gold is the go-to safe haven asset currency. It's a currency. It's money. Like crude oil is an asset class. It's not money. Gold is an asset class that's also money.
Yeah.
So it straddles everything really, and as I say, it's been impossible until recently to really access gold. Now,
Well,
as I say, what Nuggets is doing, and
yes.
I say that there's a lot. It's wonderful. It's wonderful for people. As I say, we're democratizing gold, and we're making gold. The biggest criticism for gold is that it's been a dormant asset. So you've got it, and it collects dust in a vault somewhere. But we, Nuggets, others, are now making it a dynamic asset that is democratized across the whole populations.
Absolutely. I think talking about that accessibility, the thing that we're really doing different at Nuggets is we're making it available to everybody. Minimum buy-in for as little as $10, you can purchase gold with us, which is unprecedented. People can purchase gold at market rate with no commissions. We'll pay rewards of up to 3.4% per annum. They also get access to our global network of vaults. They can gift gold easily at the click of a button to family or friends within the Nuggets community. And then coming soon, our Nuggets debit card, as we discussed. So I want to ask you, Jeff, do you think this ease of accessibility to gold through fintech apps such as Nuggets will help to drive its popularity?
Yes, it will. I think the days of the gold price being determined and dominated by a handful of bullion banks, I'm afraid the end of that particular game is coming, because it will be the people of the world that will determine the gold price and not a handful of banks.
Wow, that's powerful.
Really, it's powerful.
It is.
It is the most, as I said earlier, I hadn't seen any changes in the gold market since 1978 when I first started. And now at last, we're seeing a complete change. The advent of fintech and blockchain and so on is already putting banks under pressure. You can understand why banks are a bit nervous about this, because why do you have a bank account? You have a bank account so you put your money in there and you can pay for stuff. You don't need to do that now. You can have some gold with Nuggets and pay for stuff.
Yeah, it's great. Jeff.
It's really great.
Yeah, I have one final question for you. Yes. I'd love to hear your top tip gold advice for young people or new investors in gold. What would be your one piece of final advice for them?
Yeah, look, make sure you do, and don't worry about how small. Small is good, but when you are buying the gold, buy on a regular basis. Don't try and be smart and pick a low and then sell it at a high. Don't do that. First of all, I hope that through this podcast, we've made a case for gold, the case for gold. And if the younger people listening to us get that, then the best way is every so often, on a regular basis, add gold to your wallet. So, and then don't be afraid to spend it. So when you buy it, actually, one thing I would say is I'm often asked is, okay, when should we sell? Okay? Never. You don't need to sell. You've got an asset that will go up in value. You don't need to sell it, but use it. But you won't sell it. You will actually buy goods and services with it. That's what you do. Don't buy it and sell it. Buy it and hold it. Put it into your wallet, and then use it over time. Then when you've spent that, add some more. But generally, for anyone listening, don't speculate in gold. Just add gold to your wallets, to your wealth, as on a regular basis, and regard that as an important part of your portfolio. So, yeah, that's it.
Jeff, thank you so much for your insights. It's been a pleasure discussing all things gold with you. If you would like to learn more about how you can benefit from investing in gold, contact us through nuggets.com, where you can opt in to have daily market gold updates from Jeff Rhodes himself. He breaks it down for you day by day, so you can always be in the know on our Nuggets website, which is nuggets.com. We've put, Nuggets is spelled NAUGGETS.com. We've put AU in Nuggets as it's the periodic symbol for gold, for those of you who didn't know. I think after chatting with Jeff today, it's clear that gold is not only a great investment, but also a spending option. Thanks to key fintech players such as Nuggets, gold is becoming increasingly more accessible to the rest of us. Coming up on our next episode, we will be discussing the Nuggets journey, how a fintech platform made gold accessible and spendable for everyone. Thank you for being here.
Thanks for listening to the Future is Gold podcast. For links and contact details relevant to this episode, please see the show notes. Don't forget to subscribe to our podcast series so you'll know when the next episode is live. And follow Nuggets on social media for more gold standard content. Information contained within this series is general in nature and not directed to your personal situation. So please reach out to us or your financial expert for a more tailored approach. This podcast is a Story League production.